If you look at ApeCoin's all-time high of nearly $40 back in March 2022 and compare it to today's price of roughly 10 cents, you are looking at an asset that has lost 99% of its value. By most conventional metrics, a drop that severe signals a project that has completely stalled. Yet ApeCoin still moves over $25 million in daily trading volume. Look at this split screen. On the left, a chart of the price collapse makes it look like a dead coin. But on the right, you see consistent, heavy daily volume that tells a very different story. Retail speculators do not generate $25 million of volume every single day on an asset resting near its absolute bottom. Activity at this scale points to heavy structural use within its specific ecosystem. The question you have to answer before putting a single dollar into this asset is whether you are staring at a massive value trap or a heavily discounted utility play that the broader market is ignoring. That high daily turnover proves smart capital is actively utilizing the token. To understand why, we have to stop looking at the price chart and start looking at the mechanics under the hood. The volume exists because ApeCoin is the exclusive currency powering the entire Bored Ape Yacht Club ecosystem. That ecosystem now operates on ApeChain, a dedicated network layer built specifically to support their gaming infrastructure and NFT operations. If you want to interact with ApeChain at all, you need ApeCoin. It is functionally required to pay for network gas fees, and it serves as the base asset for all staking within that environment. Holding the token also grants you direct voting power over how the ApeCoin DAO treasury is allocated, giving large holders real leverage over the project's future. Here's the core trade-off. Within the specific niche of high-end NFT gaming, ApeCoin holds an absolute monopoly. But that success is entirely locked inside the Bored Ape universe. Outside of that specific ecosystem, the token has no broader utility. While it lacks general market appeal, its absolute necessity inside a high-volume niche provides a firm floor of utility. You have to weigh that isolated strength against the structural math of its supply. That structural math is exactly where the risk profile of ApeCoin gets complicated. The protocol has a hard cap. There will only ever be 1 billion tokens in existence. There is also no burn mechanism in the contract, meaning those 1 billion tokens are permanent. None will ever be destroyed to increase scarcity. This chart visualizes the current risk versus supply dynamic. Looking at the x-axis, roughly 75% of that 1 billion total supply is actively circulating in the market right now. That leaves 25% of the total supply locked up in holding contracts. Those contracts follow a strict unlock schedule. As you can see by the downward arrow on the chart, these unlocks create a predictable, persistent wave of new tokens hitting the market. Every time new tokens unlock, it dilutes the value of the existing supply. This creates a continuous headwind, pushing down on the price and making it significantly harder for the asset to sustain a rally. Even though the 1 billion cap guarantees long-term scarcity, buying in today means your investment has to generate enough yield to outpace a guaranteed 25% inflationary drag. When you map those supply mechanics onto the actual charts, the short-term trading setup becomes very clear. Today, ApeCoin is trading right around the 10-cent mark. That is a massive long-term reset from its peak of nearly $40 in March of 2022. However, just a few weeks ago, the token bounced off a fresh historic low, showing a sudden spike in buyer interest at the absolute bottom. That bounce gives short-term traders a cautiously bullish setup to work with. The immediate hurdle is the resistance level sitting right near 10.5 cents. If sustained buying volume can push the price through that 10.5 cent barrier, the chart opens up, creating room for rapid upside momentum. But if the price is rejected at that resistance line, the combined weight of the rejection and the ongoing token unlocks could shatter the 10-cent support floor. If that floor breaks, holders are exposed to severe downside risk. Because of these competing forces, you cannot evaluate ApeCoin with a generic one-size-fits-all approach. This scorecard breaks down the two main profiles. Let's look at the left column for momentum traders. If you play technical bounces and manage downside with strict stop losses, this asset gets a green watch rating. The volatility and volume are there. Now look at the right column for passive investors. If you are looking for a long-term set and forget asset, this receives a red avoid rating. The continuous dilution from the remaining 25% supply unlocks makes holding it passively far too dangerous. ApeCoin is a highly functional utility tool and a volatile tactical instrument for traders. But the mathematical reality of its ongoing inflation means it has no place in a passive holding portfolio right now. The utility powering ApeChain is tangible and actively moving millions daily, but it remains locked in a fierce battle against structural supply headwinds. That dynamic makes this a highly asymmetric, high-risk ecosystem play rather than a traditional investment. If it fits your strategy, it's highly accessible on Coinbase, available over on Binance, or swap directly on SushiSwap. Keep in mind, this analysis is strictly for informational purposes, not financial advice. Always do your own thorough research before allocating capital. If this breakdown helped clarify the reality behind ApeCoin, please like the video and subscribe to the channel for daily crypto breakdowns. Share this with anyone trying to understand the token, and leave a comment below. Are you bullish on the ecosystem or bearish on the tokenomics?